The Bank of Canada's latest rate announcement resulted in an interest rate cut of 25 basis points, bringing the policy rate to 2.75%. This was a widely expected move and brings the cumulative number of cuts to 225 basis points since they began last year. Trade policy uncertainty were front and center in the press release as well as the press conference, and likely suggest more cuts are coming this year. The market is currently expecting around 2 more cuts this year, but uncertainty remains very elevated with tariff announcements, at times changing by the hour. The bank also released a survey showing concerning weakness, which undoubtedly influenced their decision to cut rates. The key takeaways of the survey show that households are increasing precautionary savings in response to trade tensions and decreasing major purchases. Canadian workers are also reporting weaker job security, and businesses are decreasing employment and capital spending plans. So how are we positioning our funds given the increase in uncertainty? As investors, we must not overreact to the flow of breathless and often contradictory headlines, but it's also important not to underreact. Big changes to the global political, economic, and financial landscape appear to be underway, demanding careful adjustments in our portfolio strategy. Many of the ultimate consequences of the remarkable shift in U.S. policy will only be clear over time, but some of those consequences are already becoming visible, prompting us to adjust our positioning in line with our active asset allocation process. I'd summarize the view as the market has been priced for maximum U.S. exceptionalism, just as the U.S. government is undermining many of the things that have made the U.S. exceptional. In that context, we've taken action to reduce our exposure to U.S. equities in favor of other parts of the global equity market and increased defensive inflation-protected assets. A considerable amount of uncertainty remains around the potential for tariffs and the timing, but we are following the issue closely. Our Canadian dollar underweight favoring the U.S. dollar helps us to build in downside protection into our funds in the event of risk-off events. As a broader point, we emphasize diversification in the structure of our funds. Our research-based framework is critical in informing our positioning so that our funds can be resilient to these types of shocks that are driven oftentimes by the news.